After a long time of holding these companies, I finally did it. I sold some of my stocks. Wait, did I do it right? Let's see. In this video, we're going to talk about which companies are these, and we're also going to look at the 3 guides that I use to get an idea when do you sell your dividend stocks. Behind the stock is a company that provides value to us kababayan who are investing in the stock market. So, we should remember that we are buying part of an ownership of a business. These companies produces products and services for consumers like us. They also have manpower who builds, maintains, and manages these products and services, and they also have assets that the company owns. When you buy a stock of a company, you're not just buying a ticker symbol. You're essentially buying in to be a part owner of the business. That being said, when do you sell this ownership? When do you sell your dividend stocks? If we're just meeting today, hi, my name is Ron and welcome to Pinoy Stock Investors, where we help our kababayan start their investing journey. First and foremost, nobody knows when is the right time to sell your stocks. Not here, and definitely not here. In fact, no amount of technical analysis will reveal a pattern or a date when you should sell your stocks, not even paid professionals. So what are we talking about here? Well, what we can do is to make an informed decision. In a post from Simply Safe Dividends, Professor Brad Barber studied 66,000 trading accounts. His research showed that the buy and hold investors were outperforming the most active investors after all the trading costs by about 6 or 7 percentage points a year. So, for us kababayan, this shows that if you buy and hold for the long term, it will produce more return compared to actively buying and selling. Based on the chart earlier, if you look at number 1, these investors have a small amount of buy and sell. Their portfolio produced more return compared to number 5, who is actively buying and selling. With that in mind, the first guide when selling your stocks is when we kababayan found other opportunities that can give us a greater return. If we keep holding an underperforming company on our stock portfolio or a stock that's lagging the S&P 500, it may be better to sell the stock and put our money in a better investment. This doesn't mean that we're always going to ship our portfolio every time we see a hot stock pick. That being said, I did sell and exit one of the companies that have been in my portfolio since 2019. It's a great company with a lot of future potential and profitability, but after evaluating my portfolio, this company provided the least amount of return on my portfolio throughout the years. This company is Disney. If you're currently invested on Disney, please let me know in the comments why I should have kept it. Maybe make me regret my decision. Before exiting Disney, I did find a company with a great potential, and based on the company research that I did, this company will provide a high return on my investment. Part of the cash that I got from the sale of Disney was allocated to this new position, and I will consistently increase my position and dollar cost average. This new company is Starbucks, ticker symbol SBUX. At some point, the stock that you're holding is actually going to go out of your portfolio allocation. This is actually not a bad thing, and it's a good problem to have. I don't know why, but it keeps going up. When this happened, the stock is labeled overweight. Investors and portfolio managers do what we call rebalancing. This process is done by adjusting the weight of the different stocks in the investment portfolio, or by adjusting the amount of allocation that they put in the portfolio, or sell the part of the overweight stock if it's the best option. This is the second guide, when to sell your stock. Sell when the stock you own is too big relative to your portfolio. Luckily, I have a real life example. One of the stock on my portfolio have reached an overweight status, and that is AbbVie. I've been holding AbbVie since 2019, and recently it reached 61% of growth. I reduced my position from 17 shares up by 61% down to 12 shares adjusting my cost basis, and still up by 52%. Talk about good performance. If you're getting value and you like the real life example in this video, you can help share this video by subscribing and giving this video a like. For our third guide when to sell your dividend stocks, consider selling when the company cut or lower down their dividends. A dividend cut is when a dividend paying companies reduce the amount of the dividends or completely stop paying the dividends, which is the worst case scenario. A company will actually pick this as a last resort because the company stock price gets a significant hit when the dividends get cut. When this happens, it could mean that some financial challenges are up ahead of the company, in which case they want to keep as much cash and liquidity as much as possible. So it might be best to rethink if you want to keep the company or sell out of the position. Two examples of dividend cuts happening came from iconic companies, Disney and Ford. Both companies cut their dividends back in 2020, and out of the two, only Ford brought back their dividends. Although Disney didn't, they did increase their investment and focus on Disney+. I did kept on holding Disney after the dividend cut because I know that they're a great company. I just have a better option now. It's not you, it's me. We Kababayan as a dividend growth investors need to at least try to identify the stocks where the chances of a dividend cut are very limited. So, what's our takeaway from this? First, when you invest in stocks, you are buying part of the ownership of the business. Second, selling a stock is subjective to every different investors. Being informed will help you reduce the risk when making an investment decision. Last, holding a stock has been proven to make you more money compared to consistently buying and selling. If you want to know more why dividend growth stock investors win every time, go ahead and watch this video. I also shared the companies on my portfolio in this video. By the way, all of the information that we talked about in this video is not a financial advice. Please do your own research and consult your own financial advisor before investing your money. If you get value in this video, hit the like button. Subscribe to my channel to get updates on my future videos. It's free and it will definitely help my channel. Let me know what you think down below in the comments. I hope you guys liked this video and see you in the next one. Peace.